So today in the private Discord group, one of the members told me, hey, I'm trying to learn this strategy, but he's getting stopped out a lot. And so I asked him to send me a, example of when he got stopped out so that I could further diagnose his problem. And suddenly I realized that there is something that I have yet to talk about on YouTube that is really, really important for you to know. And this is like the one day that you should not be trading at all. And if you're interested to find out more about this, this day in particular that I'm talking about is the FOMC. Now, the FOMC simply stands for the Federal Open Market Committee. Now, this is a meeting by the Federal Reserve. And if you're wondering what the Federal Reserve is, they are simply known as the central bank of the United States of America. And what they do is they control monetary policy and they basically print money. Basically, they're like the papa banks of all banks in the United States, and every country has something like that. And a few days ago, I actually started a newsletter for the Art of Crypto, and this is absolutely free. And every week, or maybe twice a week, I simply try to provide a really in-depth analysis on what to expect the next week, or something that is happening on a macroeconomic, scale. So these are very in-depth reports that is a little bit hard to make a video for. So make sure you subscribe at theartofcrypto.substack.com. Absolutely free, and I promise, this is the place where I'm going to be providing a lot of value. Whoever read these so far, absolutely love it. So going back to the FOMC meeting. Now, the way that you figure out how to look for the FOMC meeting schedule is to go to the federalreserve.government and check out their calendar. Usually there will be 1 to 2, sometimes 3 FOMC meetings a month, usually 2. Now, the way that you filter for that is you simply go to whatever month it is, go to FOMC meetings, and just submit. So you can see that in this month, today is the 6th of July, we have an FOMC meeting. And on the 27th of July, we have another FOMC meeting. Now, why is it that, you should not trade on this day? Simply put, there is going to be a lot of uncertainty on days where there is an FOMC meeting. Now, I want you to pay attention to this. Today is the 6th of July based on New York time, and I want you to see the trading day basically for London and Asia for today have been just boring, and price has simply been consolidating and doing absolutely nothing for the past 12 hours or so. Now, why is that? Well, that's because the FOMC is a really important event. This is usually the time when the most market altering news events tend to be announced. For example, if they raise the interest rate, that's going to be done during the FOMC. Sometimes when they release the CPI, that's going to be done during the FOMC meeting as well. And it doesn't take a genius to understand how important both of these things are. And these are just some of the stuff that's announced during the FOMC meeting. And if you don't know why these affect the markets so much, is because, for example, if the interest rates are really high, if the interest rates go up, then the markets are going to go down. And this article right here at theartofcrypto.substack, that's where you can learn, in depth about how that actually works. Again, it's totally free, okay? Now, that's why interest rates matter. And you can imagine if the Federal Reserve is going to announce a change in interest rates, the whole market is going to be watching that. Oh my God, if they raise interest rates, the market's going to dump, most likely. And if they lower interest rates, the markets are probably going to pump. But we do not know that until they actually release that news. So it is really important whenever you have a FOMC day that you always wait, always wait until the results, until the FOMC meeting is actually over or close to being over before you actually jump into a position. Because as you can see, if you jump in at any given point during this, before this trading day, then you would have just gotten a whole load of nothing. Nothing's happening. And this is not something that a lot of traders talk about. You might not think that the traditional markets affect crypto because, crypto, right? But it does play a very huge role in crypto. For example, Bitcoin is highly correlated with the S&P 500. And you can imagine that when the S&P takes a dump, then Bitcoin tends to take a dump as well. Similarly, Bitcoin is inversely correlated with the DXY. When the DXY is going up, Bitcoin tends to go down. These are just some of the things that you will learn in this issue of, the newsletter. So seriously, lots of value. Make sure you head over to theartofcrypto.substack.com and check it out. Now, the other thing that you'll tend to notice on every single FOMC day, and again, I'm talking about this based on the New York time, right? If you haven't already switched your chart over to UTC-4, which is New York time, you're going to want to do so because New York is sort of like the financial juggernaut of the world. And you will notice that the best moves during any trading day tends to come during the New York session. So you always want to, base everything off of the New York time. It doesn't matter where you live in the world at the moment. I am living in Asia at the moment, and yet I still use New York time because that's the time that, simply the world runs on. And basically what you will observe happening on every FOMC day is that prior to the FOMC meeting, you are not going to get a very clear move or even just much movement at all. For example, right there. And most often you will see price go into a consolidation pattern. Now, that could be a falling wedge, that could be a pennant like this time right here, but price will always consolidate. And how do you know if the price is going to break up or if it's going to break down? Now, that's the key question. And trying to dive deeper into how to read the chart on an FOMC day to determine if the price is going to go down or up is going to be a whole video series in and of itself. So I'm not going to try to cover that here, but something that you can use is, well, the results of the FOMC meeting, right? For example, if they decide that they're not going to raise interest rates, then hey, the market can continue to go upwards for the next 2 to 3 weeks until the next FOMC. But if they are going to raise the interest rates by like another 75 basis points, then you can expect the market to not do pretty hot. So that is going to be the most surefire way for you to determine the direction that price is going to go to during an FOMC day. And just remember that the reason they keep price doing absolutely nothing until the actual FOMC meeting itself is because they want to induce liquidity. They know that most retail traders are very impatient, and so they just want to jump into a position when they see something. And that is how the market makers make most of their money, from impatient retail traders, because they simply jump in when the time is not right. So if you want to get the best results with your trading, you're going to want to wait until the FOMC meeting is over and not fall into the traps of these market makers. And of course, if you want to level up your trading game, then you're going to want to join the AOC Academy. The link will be in the description box below. Bye bye.